In today's video, we're answering one simple question. Is it too late to invest in Palantir now? At $42, this stock has gone up by 300% over the past 3 years. It has 4x'd since it went public in 2020. A lot of investors are saying to themselves, well, there's so much hype around the stock, so much noise, so much FOMO, and the stock has ran up like crazy. Maybe it is simply too late to invest in Palantir. And that's the topic of today's video. And I promise you, by the end of this video, you'll have all the answers. I'm not going to leave you hanging. But I do want to share a personal story with you. 4 years ago, about October 2020, I was having dinner with the family. And as you would expect, I was blathering on and on about Palantir, how great it is, how phenomenal of a company that is. That's what I do in every dinner since 2020, pretty much. And back then, it was a novelty because my family wasn't used to it. And my cousin Dima basically purchased a lot of Palantir shares at $10 per share. And as you remember, back in the day, we had all this Reddit hype, the meme stocks, and the Reddit crowd basically took the stock to $35 per share very, very quickly. So I get a phone call from my cousin Dima, and he's like, look, you're a genius. I got to hand it to you. You called it. I love you, blah, 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 blah. And he basically said one simple thing. He said, look, I wish I would have bought more of this. And I told him, hey, you don't got to worry because you're going to have a chance inevitably because every stock goes through cycles. The stock is going to drop. It's going to go up. No stock goes up in a vertical line. It doesn't exist, Dima. So just relax and wait for your opportunity. Now, I didn't know the stock was going to drop all the way down to $6.5 within a year, but it did. And then my cousin Dima calls me again and he says, look, Tom, maybe it's time to sell. Maybe it's over. Look, the stock is tanking. Everybody's saying that Palantir is finished. Maybe it's time I take my money. I take my L. I lose 20-30% on this, but I'll be fine. And, I'll survive to fight another day. And I answered his question in this manner. I said, look, Dima, imagine you have a farm. And your next door neighbor, he also has a farm. The farm has cows, it produces dairy, whatever, right? But you make a certain amount of money from that farm. The land is worth a certain amount of money. And every morning, your crazy neighbor gets out of bed, goes to his porch, and shouts to you that he wants to buy your farm at a certain price. In certain days, he's absolutely manic and is willing to offer you 6 times of what your farm is worth. And in certain days, he has a fight with his wife. He comes out and he's lowballing you and he basically says, look, sell your farm for 1/10 of what it's worth. Would you be more inclined to sell the farm because your neighbor is being irrational, crazy, lowballing you, offering you 1/10 of the price of the farm? Would that freak you out? Would that make you nervous? Or you would just say, well, this guy is crazy. This farm is worth 10 times of what this guy just shouted. And of course, he understood my example. The example is there to show you that the short-term prices of stocks are absolutely disconnected, disjointed from the fundamentals of the companies they represent. In the short term, the price of the stock is mainly driven by psychology, by manipulation, by media, by sentiment. Very little fundamental analysis goes into the short-term price fluctuations of stocks. And when I say short-term, I mean 6 to 18 months. That is what I define as short-term. And I told him, look, Dima, ask yourself this question. What were the reasons you invested in Palantir? Did any of these fundamental reasons change, deteriorate, got worse? Or did they stay the same or maybe even got better? And now the price is significantly cheaper than what you paid for it originally. And then he said, look, nothing has changed. In fact, the company even looks better now. So I told him, look, if the business got better, the stock got cheaper, you know what to do. I mean, if that's how you feel about Palantir, there's your opportunity to double down and dollar cost average into the stock and wait for the fundamentals to take over the price. Because here's the secret about investing. The longer you stay in the market, the more the fundamentals take over the price of the stock over the short-term noise. And that's the thing I wanted Dima to understand. And finally, he got it. So this week, we had a kind of an off week with Palantir. The stock was down 3% this week. And he gives me a call and said, look, Tom, I finally understand what you were talking about. I get it. I get it. I finally understand what you were trying to explain to me for the past 4 years. Noise in the short term is irrelevant. This week, the stock is down. Last week, the stock was up. I don't care. As long as the company is still good, I ignore the noise and I dollar cost average. And if the stock drops significantly, I'll dollar cost average and buy more of it, and I'll just ignore the noise and keep doing that into infinity. And you know what? I've never felt so proud of my cousin than at that moment, because he figured out the secret to investing, and that thing eludes most individual investors, unfortunately. The game is mainly psychological. Now, I have decided months ago, I don't know if you noticed, to not live stream Palantir earnings. And people are asking me, well, Tom, why don't you stream Palantir earnings? There's going to be so much viewers, so much traffic, so much revenue from the good old YouTube revenue share. You're going to have thousands of viewers, etc., etc. Why aren't you streaming the Palantir earnings? Why do you wait the next day to deliver a 7-minute recap video with kind of the bottom line of what happened? Well, that is because I don't want to be a contributor to the noise that's driving short-term insanity and volatility, and basically encourages you to think there's something urgent about this. There is nothing urgent about the Palantir earnings. Nothing is going to change if you find out about the earnings in a day or two. And nothing you need to do in the earnings, after the earnings, in the next few hours, unless you are a trader, which I don't think you are because you're watching my channel. As a long-term investor, you simply should not care and get super excited about the earnings in the way that you have to get your fix right away. I'm not going to contribute to this bullshit by creating more noise, sitting there for 3 hours, wasting your time, delivering no value, accumulating ad revenue and clout. Instead, I'm going to wait for the next day, give you the bottom line up front, give you a 7-minute video, and tell you exactly what was the story and end it there. And look, I don't know what the stock is going to do for the next 6 to 18 months. I have no idea, and frankly, nobody else does. If they're telling you they have a price target for the next 12 months, 18 months, it is mainly a pipe dream. They're selling you something. Ignore this bullshit. Nobody knows. I mean, I can show you a DCF that shows you a $20 valuation, a $40 valuation, a $60 valuation, and so forth. The Excel spreadsheet, that's going to absorb anything I put into it. But this is going to be absolute horse manure. Because look, trying to find this perfect entry point or exit point for that matter, and trying to figure out where the stock is going to move in the short term. Look, anything can happen. Nobody can predict this. It's a futile waste of energy. Unless you want to define yourself as a gambler, that's a whole different story. I don't think short-term price even matters as much as media and other social media influencers are telling you. It's not that important. The short-term price target is irrelevant. The short-term price fluctuations are meaningless. They're not as important as you think, and I'm going to prove it to you. Look, Microsoft back in 1986, right, IPO'd almost 40 years ago at 10 cents per share. 10 cents per share. Now, 1990, 4 years later, it has 10x to $1 per share. Then another 9 years later, it was 58 times the previous price point. $58 per share. Let's say you've completely missed the boat and overpaid. You bought at $100 per share. You have missed the boat. Very late. Very overvalued. From this point on, you are up 4 times on your money. From $100 to $400. You still made 4x on your money by being late to invest in a great company. That's the point I'm making here. And you can see this example in other companies. Apple, for example. And again, I'm not comparing Palantir to Apple. Different companies, different business models. I'm not saying they are similar or comparable. I'm using this as a concept to make a point. Apple, about 20 years ago, was a $1 stock. 2004, $1 per share. By 2009, the stock is trading at $7. It has 7x. And people are saying, well, now it's overvalued. But guess what? By 2015, the stock is at $30. Now people are saying it's overvalued. From 2015 to now, 10 years later, the stock has 10x. So now it's overvalued, right? You see my point here? It is never, never, never overvalued if you're investing in a great generational company. And I see a lot of these patterns with Palantir. I mean, the stock launched at $10, then it went up to $35 on pure hype and meme stocks and FOMO. It quickly went down to $6.50. Meanwhile, the company was busy getting better, getting more money in. And we had this meme going, when the stock would drop on the day that Palantir would announce another great contract. So Palantir kept announcing contracts and business and getting better, but the stock kept falling. We found it funny. Nobody thought it was a bad thing. We understood we're getting primed for the big bounce, and that big bounce happened from $6.50 to $42, and now we're here. And the lessons here are very simple. Number one, I think it's important to understand that time is the best friend of a great business. If a company is getting beaten down because of market sentiment, because of manipulation, because of just bad juju, at the end of the day, if the fundamentals are that great, the fundamentals long-term will take over the price action. And number two, it's obvious. You cannot time a stock like Palantir. It is impossible. The growth volatility aspects of the stock in the short term are going to be insanely unpredictable and just basically random. And I can actually prove it to you using numbers and data. Check it out. So let's assume we have three style of dollar cost average investors in Palantir. Cautious guy, average guy, daring guy, right? So all these investors do is dollar cost average into Palantir. So they are my people, but they use completely different strategies. Cautious basically says, look, whenever the stock drops 20% below the 52-week high price point, I'm going to stop dollar cost average and I'm not going to resume until the stock climbs back up into that area above 20% of the 52-week high. And I'm just going to buy when the stock is riding high. I'm not going to buy when it drops. The average investor basically says, I don't care about the noise. All I'm going to do is dollar cost average $100 every week, no matter what. It's up, it's down. I completely ignore the noise. And daring, he basically is my dude. He says, look, whenever the stock drops 20% below the 52-week high, I'm buying at $200 per share. And as long as it stays below 20% of the 52-week high, I'm going to keep doubling down at $200 every week. And if the stock climbs back up into that region, into the 20% of the 52-week high, I'm going to go back to $100 every single week. So basically, cautious only buys when it's up, average buys $100 every week no matter what, and daring, he buys $100 every week, but if the stock drops, he buys $200. And he continues as long as the stock remains low. So check this out. Going back to October 2020, when the company went public, here's the data. It's going to blow your mind. After 1 year of this, cautious was up 25%. Average was up only 13%. And daring was only up 9.5%. So the results are simple. The best approach is to be cautious, right? We've just shown you that after 1 year, this cautious guy has more than double the returns of the daring guy. But guess what? Daring is playing a marathon game, not a sprint. So here's what happens. 3 years into this journey, we look at the results, and the results are starting to look a little bit different. Cautious guy is down 6% because the market has turned on him. And daring guy is up 32% because he's buying the dip more aggressively. And now we look at all the way to 2024, current time. Cautious is up 110% because at the end of the day, the stock has doubled and he's doing fine. He's down 100%, 110%. That's not bad at all. The only issue is that average has done almost double, 194%, by just staying in the market and dollar cost averaging nonstop. But guess what? Daring, that doubled down, actually improved and got to 220%, even better. So while everybody made money dollar cost averaging into the market, the one guy that has done better, significantly better than everybody, is daring, using the double down DCA approach in which you buy more when the stock is down and buy less when the stock is up. The numbers don't lie. There's only one problem. This thing does not work unless Palantir is the next Microsoft level of a generational company. If the company is good, it's not going to be enough. Palantir has to be great for this thing to work. Unless it's a great generational company, this juju I just talked to you about means nothing because dollar cost averaging deep and hard into something that's just average or slightly above average is not going to get you anywhere. The one condition that needs to happen here in order for this to make you money is for the company you have selected to become a generational juggernaut in the stock market. So how do I know that Palantir is that generational juggernaut, right? Right now, the forward PE of Palantir is 98. It is insane. It is 3 times more expensive than Nvidia right now as far as forward PE. It is absolutely insane. Why not buy Nvidia at 33 forward PE when Palantir is 3 times more? It's not 3 times better. I'm not saying it's 3 times better, but guess what? If Palantir becomes a $1 trillion company, which I personally, in my opinion, think it has a good chance of doing, then we're going to 10x our money. But as far as Nvidia goes, the upside, the ceiling is not that high. Nvidia is already a $3 trillion company. How bigger can it get from here? Can it get to 6 trillion? 9 trillion? Let's say it goes to 9 trillion. You have 3x your money. So at the end of the day, the potential to me as an investor on a company like Nvidia is maybe 3x from here. But on a company like Palantir, it's more than 10, 15, maybe even 20x. Who knows with Palantir? If Palantir is going to be the most important software company in the world in 10, 15 years, this number might even double, maybe 20x. Who knows at this point? So here's the thing. I am okay with uncertainty. I am okay with getting this wrong. Maybe I don't have all the answers. I certainly don't have a crystal ball. So maybe I'm off about Palantir, and that's fine. The fact that I don't know for certain is okay with me because as a long-term investor, I am comfortable with uncertainty. The thing is, I look at Palantir and I look at metrics like Rule of 40, for example, which are a great way to analyze a growth company, especially in SaaS, especially in the line of business that Palantir does. Rule of 40 basically says that if you add up the free cash flow margin and the revenue growth, if you get 40, that's phenomenal. 35 is good, 30 is okay. Palantir is at 50 right now. It is absolutely phenomenal. If you look at the founders, Peter Thiel came from PayPal, Facebook, a billionaire, 0 to 1, one of the best books ever written. He's still there in the company 20 years later. Alex Karp is still there, also another billionaire, up there, still in the company, haven't left. In fact, they also have Class F shares, which basically means they will never leave this company. So the founders that I'm invested in are never going to leave. On top of it, we have Ontology. Now, Ontology, in case you're not that tech savvy, which, by the way, I'm not that tech savvy, so it's okay. Don't feel bad about it. I'm not the technical guy here. But Ontology, the way I understand it, is basically the operating system that runs AI in businesses. If you imagine all these AI systems working basically separately in different aspects of the business, all this data being generated, all these different analytical tools working in the business, in the warehouse, in the scheduling, in the maintenance, all this craziness going on, Ontology basically bring all of these AI models, all these analytic tools into one place where the company can make instantaneous decisions based on all this data, all this craziness that's going on. Now, it basically allows companies to easily apply whatever AI models they're running, whatever AI systems they're running at almost seamless, quick times that are basically unheard of. We have CEOs of companies talking about how Palantir changed the way they do business. Things that used to take 6 weeks now take 6 minutes. Essentially, this is the operating system that the business world is going to run on for the next 50 to 20 years. And to ignore it is kind of foolish in my opinion. So you have Nvidia, right? Nvidia is basically creating the asphalt, right? They're building the building blocks of this, and they're absolutely going haywire right now, rightfully so. You have the various large language models, and these are the cars you're going to drive on these roads, and they're going to take you wherever you want to go. But Palantir actually paves the roads and gives you the map of the GPS of where you want to go. Without a map, without a GPS, without a road, a car and some asphalt ain't going to get you anywhere. And the only guys who have the maps and the capabilities to pave these roads is Palantir. It is unrivaled. Nobody comes close. There's not a second contender there. Microsoft tried and failed with Fabric. Rest in peace, Fabric. In fact, I've never been more bullish about Palantir than I am right now. Now look, the fundamentals right now are good. They're not amazing. I mean, if you look at the growth numbers, 20% growth per year, that's okay. I mean, they're getting better at becoming more efficient, so we have less expenses while the revenues are growing, great margins, we have no debt. The balance sheet is very, very clean. But what you need to understand that, in my opinion, I think we're really not there yet. This is not the quantum leap of Palantir. Growing 20% per year, this is basically Palantir idling, waiting for the quantum leap. We are just before the big Nvidia moment for Palantir. And Palantir isn't just sitting there waiting and hoping and wishing for this thing to happen. They're making all the right moves behind the scenes, prepping for this quantum leap. In fact, they're not really good at communicating how much better they're getting. I like their approach. It reminds me of the old Bill Parcells football coach where he just said, do your fucking job. I mean, that's it. That's as simple as that. That's what Palantir has been doing for the past 4 years. Not really bragging, not talking too much. I mean, occasionally Alex Karp, the CEO, co-founder, he comes out and he says a few things, but mainly Palantir has stayed quiet. And yet, despite that, the stock is up 300% over the past 3 years. If you look at this company already in its current configuration, where Alex Karp has gotten it to, it's impressive, right? $100 billion market cap, 20% growth. They're beating earnings consistently now. Clean balance sheet, no debt. the moat that he created for Palantir is unsurmountable. Scalability is excellent. All of this is great, especially for a company that doesn't have any macro sensitivity because of the government business. That's a huge shield. And its amazing leadership and its culture. All of this is great, but this is just the tip of the iceberg, folks. You ain't seen nothing yet. And for me, I wouldn't get bogged down in the current price fluctuation of the stock if that is what I believe in. Now, I'm not telling you what to believe in. And I'm actually literally going to tell you right now, don't buy a stock because some YouTuber absolutely fell in love with it. Don't. Do your own research. But if you come to the same conclusion that I have, which is this is the next big, most important software company in the world, in that case, who cares whether Palantir is a little bit overvalued right now? Frankly, the current share price is a little bit overvalued. I get it. I mean, it has run up a little bit too quickly. Fine. Who cares? If you're looking at this as a $400, $500 stock, does it matter if you bought at 40 or 50 or 60? Now, we teach all these principles in our academy. Head on over to patreon.com/Tom Nash. We have a few limited spots left at $35 per spot. They're going to go soon. Join the academy. We have a lecture about how to start your DCA journey, how to prep for it, how to build a situation where no matter how much money you're making, you still have enough money to dollar cost average and double down when needed to. Essentially, what we're going to do is we're going to teach you how to become a long-term investor, a stoic, conviction-based investor, not the clowns who have sold Palantir for $9 because Alex Karp banged on the table too loud.
My life be like